Hey everybody, it's Nikki here with She Talks Finance, and we're sitting in this beautiful setting. It's snowing, it's gorgeous, and I'm here with my great friend Travis DeVitt, who's also known as Stock Geek TV. Definitely follow him. But basically, Travis is a professional stock market investor. I call him a hedge fund genius. He worked for a hedge fund, ran a hedge fund, and basically knows a lot about investing in the stock market. And what we do is we're mentors together in the Skill Incubator investor community, and we are in there talking shop. We're talking about the markets with our members. We have a lot of fun talking about it. Even when we're not in the community, when we're at dinner, we're still talking about the markets. So it's definitely a passion of both of ours. And I wanted to bring him in today to talk about his style of investing and talk about women in investing, which is a fun topic that I like to discuss often. And we're gonna get his opinion on stock picking, because that is essentially what your specialty is.
That's
correct?
right, yeah.
So what is your thought? Do you think that everyday people should be picking stocks?
That's a really good question. I've had this debate with a lot of friends of mine, actually. And you know, there's a lot of research out there that shows that most people and most funds don't beat the market average return. And so what you'll find is a lot of advisors will say, okay, we should just put all your money in index funds, earn your average, 7 or 8% annual return over a long period of time, and just forget about trying to pick stocks. And I think that's maybe correct information for a lot of folks who don't have time or resources to invest in getting better at investing. But for those of us that do and are fortunate to be able to lean on education, but also like a community like ours, I think that it would be a disservice to accept an average return and not go out and seek those above average returns that can really transform your wealth. Because when you compound over a long period of time, the difference between, say, a 15 or 20% annual return is vastly superior to earning a market average. I mean, it sounds like you're earning just double the amount of return, but over a long period of time, that, as you know, compounds. And someone who earns 15 to 20% a year is going to end up with an ending portfolio value of like 10 or 20 times someone who earns just the market average.
Absolutely.
So
yeah, and a lot of people, especially women. I've been a woman. I call it a woman on Wall Street, but obviously I'm not, at the stock exchange. But I've been in this world for about a decade now, a little over a decade, and I am almost all of the time, I'm one of, if I'm not the only woman, there's a few other wives in the room that are learning with their husbands, and it's usually just a handful of women that are in an entire room of men. So I'm very passionate about this. I think that investing in the stock market has been very overwhelming for a lot of women, so they don't get involved.
Yeah.
They don't, learn.
Yeah.
Because A, they don't know how to start. B, they feel like they can't do it because it's either they're intimidated by the amount of men that are in this industry, or they just feel like it's out of reach. And I want to encourage women, because I love this. Like, the stock market is my passion. I love talking stocks with you. I love talking stocks with my husband, Chris. And I think that there are a lot more women that would actually be really good at investing in the stock market.
Yeah.
We tend to make better investors, actually.
Yeah, the studies show that women are actually, on average, better investors than men. Mm-hmm. And yet somehow still 80 or 90% of the individual investors out there picking stocks are men. So,
right.
Ladies,
so
what are you
ladies,
doing? We need you.
Ladies, there are a lot of misconceptions in this industry. I think people think that they can't pick stocks because it's A, they shouldn't be, or B, they don't know how, or they think it's too hard. So talk to us a little bit about, I don't want to call it the simplicity of stock picking, but I know that we've discussed this before, how it's actually not that hard if you're looking at solid companies and you're holding for long periods of time. Like I know you've had a few examples of women that that have done that.
Well, your stock picks have been phenomenal, and you've outperformed. I mean, we've actually collaborated on a few investment positions where we both did joint research and we both bought the stock, and somehow we bought the same stock and you end up with a higher return, which is amazing.
I just hold.
Yeah, because you're more patient, and that actually is I think one of the fundamental reasons why we see these studies where women are outperforming men, because women do psychologically they approach the market and investing in a different way than men on average, and it tends to be a more patient style. And honestly, that can really work. Like, we have positions like Lululemon or Square that we bought, and I even held them for multiple years, but I sold them after they were up, 200-300%, and you're still holding them after 400, 500, 600% gains.
Yeah.
So look, I mean, when it comes to, people are right when they say that, if you're trying to day trade and you're trying to be hyper active in the stock market, chances are you're going to underperform. There are algorithmic traders, quant hedge funds with resources that you can't even imagine, who are out there picking off people on every single trade in every single millisecond, and they are going to win that game. But when you get to a more buy and hold longer term strategy where you're actually buying fundamentally strong companies and you're holding them for long periods of time, algorithms aren't thinking about what a company is going to be able to do in 5 or 10 years. Whereas with our human judgment, we can look out and say, well, I think, Apple trading at 9 times earnings in 2014, and they've got this pipeline of wonderful products, and you can see around you all the, services and products that they're starting to produce in everyone's lives, right? You can see that and look out 10 years and say, I think this is fundamentally worth buying and owning for a long period of time.
Exactly.
And that gives you the opportunity to earn good returns.
We can think critically.
Yeah.
Computers cannot.
Yeah.
And that's where our edge is. Even with something like Apple, which I bought Apple last year, and I'm up 100% on Apple right now. But I was able to think through that. I was able to say, okay, you know what? This pessimism seems a little bit overdone. Apple's got XYZ going on. Apple Watch is up and coming still and growing. You can think about these things that you see around you. EarPods were super up and coming as well. So it's being able to think critically, and it's actually not that hard, right?
Yeah.
And even Lululemon is a great example.
Yeah.
I was a new customer to Lululemon. I saw how amazing Lululemon was, A, as a company, B, their product. And when they had their see-through yoga pants debacle, I was like, okay, the stock is selling off. America doesn't even fully know about Lululemon yet. There's still tons of brand awareness to be had. And I was just thinking through it. And it wasn't all financials. I mean, yes, of course, I'm looking at financial statements and I'm looking at valuations, but it doesn't necessarily have to be that complicated.
Right.
Right?
Yeah.
So obviously I'm a proponent of learning how to do fundamental analysis, which fundamental analysis is essentially being able to look at the financials of a company and say, okay, they have no debt, they have this amount of cash on their balance sheet, they are a healthy company, they're growing sales. Like, that's fundamental analysis. That's your forte.
That's right.
That's what Travis is super, super brilliant at. He knows it in and out. And that's what we're kind of talking about in our investor community, is we're talking about those types of things, but it doesn't necessarily have to be that complicated.
Yeah. Well, Lulu's a great example too, like you mentioned. Like, an algorithm is not going to know that Lululemon just launched their first set of international stores. The algorithm isn't necessarily going to know that they launched their men's business and it's flying off the shelves, right? Like, the algorithm maybe will know that from the earnings results 2 quarters from now, but they don't know it when it's first happening. And like, someone like us can see that and go, oh, they have a real opportunity to like double the size of the business just by adding the men's line.
Exactly.
And
Is
the products
this
are
Lululemon,
great.
by the way?
It's not, but
No, I'm just kidding.
but trust me, a lot of my closet
he wears
is.
a lot of Lululemon.
I'm a convert.
So does my husband, Chris. His whole closet is Lululemon. Anyway, side note.
But yeah, I mean, like, even the most famous investor of all time, Warren Buffett, right? His style is very simplistic. Like, yes, he knows how to read a balance sheet and income statement, and he knows how to read, the footnotes to a financial statement, but he'll even tell you that most of his greatest investments have come from just a really fundamental analysis of what that company does and how that company has a sustainable competitive advantage, and he'll buy it at a reasonable valuation, and then he'll literally hold it for 2 decades.
Forever.
And what algorithm does that, right? So.
And get paid dividends.
Yeah, exactly. So we overcomplicate the game of investing sometimes, and I think people who are focused on specific strategies are probably having to get very complicated. But then there's this whole other side of investing and picking stocks that doesn't have to be complicated, then it can actually earn you solid returns over time.
And then it helps having someone like you in our corner where we can say, hey, I'm looking at this stock, what do you think about it? And then you're saying, oh, well, they got a lot of debt, or they got this or that, and that's very helpful to know those things in the back. in the back of your mind. But yeah, it's definitely something that is doable. Women actually are pretty darn good at it, believe it or not. And I think that, I mean, females are starting to become more prominent in the finance space, and especially, investing. So I have high hopes for the future, but.
Let me ask you this. When you first started investing in stocks, like literally the first week you opened your brokerage account, first of all, like, was that intimidating? Like opening a brokerage account, was that hard? Was that intimidating? Like, how did you feel about that?
Opening a brokerage account, once you actually just get the basics of it, it's so simple. It's as easy as going to a bank and opening up a bank account.
But you can even do it on a website now.
You can do it on a website.
Yeah.
You don't even have to go.
Join on an app.
You literally just go open an account. It walks you through it, and then you put in all your information. Boom, you have a brokerage account, and then it says, okay, how do you want to fund your brokerage account? And you put in your bank, and the money transfers over, and there you are. You have money in a brokerage account that you can buy and sell stocks in. So it's really not that complex.
Do you remember the first stock you ever bought?
I remember the first stock I ever bought for fundamentals,
Okay.
which was Square,
Oh.
which I'm still holding today, and I'm very happy with the
What's your
performance.
percentage gain on Square?
It's, what did I say earlier? It was 790%
That is
right
so
now.
insane. That's
so
amazing.
about 800%.
Yeah.
But at its peak, I think it was definitely over 800%.
Yeah.
But that's just, I saw the trend with the Square readers.
Mm-hmm.
That was kind of new. It was up and coming back then. It was.
Yeah.
We were just starting to see it, and small business owners are a huge market.
Yeah.
And they were serving that market.
Yeah.
And I loved that thought and that idea. So I went in on it, and it was the first stock I ever bought and held
Mm-hmm.
because of you.
Yeah. Yeah, we collaborated on that one a bit.
I was a day trader.
Yeah.
I was in and out in the same day. I was very active. I was a day trader for years. And then I started talking with Travis, learning about his strategy, which is buy and hold, longer term, really digging into the fundamentals of a company. And I was super intrigued. And then from there, the rest is history, and I completely went all in that.
Yeah, that was a really cool one, because I think you first actually asked me about the stock. It had IPO'd, I want to say, like, must have been 2016 or so, maybe 2017, and it was sort of ignored. Like the first 6 or 12 months that stock was public, it kind of traded in a range between like $15 a share and like $9 a share. I think we first started looking at it at like $10 a share. You brought it to me and said, hey, what do you think about this? Like, I noticed these Square readers everywhere. And I was like, oh, let me take a look. And I looked at the financials and kind of the trends in the company, and they were growing, I think, about 25-30% a year at the time. And I was like, oh, this is actually pretty interesting. They have a lot of runway for growth over the next decade.
I remember where I was when I asked you that.
Yeah.
I was at the car wash.
Yeah, the car. That's funny. I don't remember that, but that's. Hey, I mean, you could be anywhere, right? And you're just like.
I remember talking to you. I remember that moment. I don't know. It's weird, but I remember.
I have those weird moments too, though, where like I'll see something in real life and I'll be like, who makes that? Or literally, I think one time I was in the bathroom and I was like, toilets are phenomenal business. Like, they're just like, you always need toilets. And I was like, who makes these toilets? And like, I found the public company that like made these toilets.
Exactly. Or Kimberly Clark,
like,
who does the toilet roll dispensers.
Yeah.
Kimberly Clark,
yeah,
right?
Absolutely, huge company.
Publicly traded.
Yeah. So sometimes you just find like these stocks in daily life, and like maybe 1 out of 10 are actually investable, but sometimes it's just something in your daily life you see, and then you latch onto it and you realize actually there's a really good opportunity with the stock.
Roku's
You
had
another one,
Roku
yeah.
recently.
But Square was so interesting. I don't want to leave that thread, because like Square, you identified the trend first. You came to me and you said, okay, check out the fundamentals and make sure this is like sound. And I was like, actually, it looks really good. And this is a really good setup, like no one's paying attention to the stock. We both bought it. I sold, of course, after it like tripled. You're up like 7 or 8x on it now. And again, just proving that women are better investors than men. But
well, there you have it, guys.
Yeah.
That's it.
but it's an interesting lesson, because I do think it's interesting to have the our styles kind of together is like sort of like, I think a really good match, and I think it makes both of us better. Like
I think so too, yeah.
Like doing investing alone is sometimes lonely, and you have these bias biases. Yeah.
Biases? I don't know.
And everyone has them, and some people you index, towards others more so. Like for me, I sell too early, and I know that about myself, but I still, even though I know it about myself, I still do it. And maybe, other male traders, maybe their problem is they're too aggressive or they rage trade. And
rage trade.
But everyone's got these behavioral biases, but when you can combine it with someone else who maybe is complementary, like you and I, it helps a lot. So that's why I love our community.
Yeah. I mean, Domo, that was you. You brought me Domo.
Yeah.
I just took the trade on it and did it. And Domo was one recently that I had taken a swing trade on, and he gave me the idea. So we work together. It's fun.
Yeah, it's awesome. So yeah, and you mentioned Roku.
Yeah.
That's another interesting one. Should we talk about that one?
Yeah.
Another one where I sold too early.
Yeah.
It's kind of funny though. I think Square was the best performing stock of either 2017 or 2018. Roku was the best performing stock of 2019, and it was up I think 500% in 2019.
Where did you sell?
Oh, I can't say. I'm so
Just
embarrassed.
Just say it.
I think I sold it like 60.
And what's it at now?
130.
Okay, we'll be at the bar.
Yeah, I'm gonna need another one of these real quick.
We're gonna pour one out for Travis and Roku.
Yeah.
Yeah, sorry about that.
Yeah, it happens. But
that's been a monster. It's been a monster.
But that's another one where it's like, okay, I literally use that product in my daily life. The stock had corrected a lot during the stock market correction of December 2018. We were able to buy it on sale, and it was a company that looked sound, had a long runway for growth. The algorithms were probably just selling the stock because it was already down. And if you have the right mindset and you do your homework and you spend a little time to try to really understand something like that, then you can see things that the rest of these hyper short-term investors maybe don't see.
Exactly.
And that's that this thing can be, in 10 years, 5 years, it can be a totally different, much larger enterprise than it is today. So.
And that's what's fun about investing for me. Probably the same thing for you. Is I almost feel like I'm an investigator. And I get a stock that I'm interested in, and I'm digging in, and I'm using Google Trends, and I'm stalking the website traffic, and I'm just checking it all out as if I'm Sherlock Holmes or something. And that's fun for me. I enjoy it. And I think that there are a lot of women out there that would actually enjoy the process of investing. Or active investing. Active investing. And one thing that I like to tell people is it's okay to have a mix of both. It's okay to have, I've got a passive investing portfolio, and I've got an active investing portfolio where I'm picking stocks. Over here I'm in ETFs, long-term holds, not touching it for 30 years. Over here I'm paying attention to it more closely, looking for deals. That's where the alpha is what it's called, in the investing world, is the higher returns, the extra return above what the stock market is giving you on a yearly basis. So that's where that comes into play. So it's good to have a little bit of both and kind of hedge those two strategies.
Where do you recommend someone start? Let's say, you're a female who's interested in investing, and you're just kind of starting your investing journey, and you want to go deeper into active investing. Where do you start?
So for a female that's interested in investing, to start the investing journey, I tell people to do research on what a brokerage account is, because that's the pinnacle of it all, right? That's where it starts. And knowing what a brokerage account is, how it functions, that will help people get a little bit more comfortable. And then as far as learning about the basics of the stock market, I have a great video on my YouTube channel called Stock Market Investing for Newbies. I also, I think that it's just good to learn about, what is the S&P 500? What is the NASDAQ? What is the New York Stock Exchange? All these terms that you probably hear a lot, but you don't really know what it means. Get familiar with those terms, and I do cover that in my video on my YouTube channel, so I highly suggest that. Also, it's good to find professionals that know what they're doing and see if they have education on these topics. You have a course, I have a course, so it's good to find professionals that you trust, that you think kind of know what they're doing. Find someone that you like, find out if they have some type of education on it, because odds are they are getting to the point, they're cutting to the chase, they're giving you, exactly what you need to know without all the fluff. So that's what I would suggest.
Nice. Are there any books that you read that you think are valuable, or?
So I think that's a better question for you. Because I kind of learned from the School of Hard Knocks.
Yeah.
I read books
Yeah.
throughout when I was learning, but I was just kind of in the market and
Yeah.
reading the Wall Street Journal, and I just kind of threw myself into it.
Yeah.
So, do you have any books?
I mean, there is no substitute for actual investing experience, and you got to be careful, because what you don't want to do is start invest all your portfolio in like one or two stocks and just be totally undiversified and make mistakes and then blow out of your money, right? Like, you don't want to do that and end up having to start over. So I do think you need to approach it at the beginning with more conservatism than you probably even think is necessary.
Mm-hmm.
But there are some books I think that are helpful, like Peter Lynch. We've been talking today about finding stocks in your actual real life, right? And Peter Lynch, that's kind of his method. Like he wrote a book 20 years ago or 25 years ago called One Up on Wall Street. And I think that's a pretty interesting and entertaining book, and it talks about how a lot of these outperforming stocks originate with trends that you can see in your daily lives before the people on Wall Street notice them. So I think that's actually a really good one, and it does talk about some technical things like the PE ratio and valuations, and what you can look at that might eliminate a company from your search, right? Like if it has too much debt or something like that. So,
yes.
So that one's a good one.
I know Tony Robbins has a book on investing that I've heard is good. I have not read it,
Okay.
but I've heard that it's good for beginners.
Okay.
So
I haven't read it either, so I
that
can't.
would be one. I
can't
have it
endorse
on my desk. I just haven't read it yet.
Yeah.
But besides that, yeah, that's probably all I got.
Yeah, there's a lot of books out there. I'm going to do a future video on like my favorite 10 investing books. Some are more technical than others, and I think
that's the problem.
Yeah.
With a lot of the investing books out there,
Yeah.
is they are technical.
Yeah. Well, and that's why we've started building these courses, because one, a lot of these books, even the good ones, are kind of out of date. Like Peter Lynch's book was written 25 years ago, and there's some stuff that still applies, but there's other stuff that doesn't, And so I think with like the way that, how fast information and just, the society evolves now, like we have to update that. And so we've started creating courses to try to address that. And it's very visual, it's very
simplifying it,
yeah.
simplifying the concepts a bit for people.
Yeah, well, in our courses, I think we start simple, but we get very detailed if you want to go deep.
Yes.
If you want to go deep. So I think that's one benefit of something like that.
Yeah, you layer it on as you go.
Yeah.
And it may seem like you'll never get there, but I always tell people, like, small bites. Just take small bites of knowledge.
Yep.
Teach yourself one concept at a time, and eventually, in a few months, you'll be like, oh yeah, I know what a PE ratio is and how to find it and how to compare it with another company, and just these little things that build up over time.
I mean, I'll be honest, I still refer to some of my like corporate finance textbooks, and I have a couple other books, like technical books on accounting and things like that. I'll still reference them. I still Google search things that I knew about. Like,
oh, for sure.
Like when I took the CFA exam, like a lot of that stuff that was in my head that's like now gone like somewhere else, like I'll still Google that stuff even though I used to know it. Like I kind of forgot it.
Tell people what the CFA exam is.
Well, so there's the CFA, the Chartered Financial Analyst exam. It's like 3 parts. It's super difficult. There's also the CFP, Certified Financial Planner, which you passed.
I did.
By the way.
But,
so not to toot your horn, but
no,
it deserves to be tooted.
Well, thank you. But the CFA is a big accomplishment as well. And
both are very, very difficult tests to prepare for and pass. And so anyone with a CFA or a CFP designation, I think, is someone that you can trust that they're not like a total idiot. Like, like there's still
something.
Like there are still some CFAs and CFPs where I'm like, really? Like, really?
That's the thing about this industry is there are so many opinions, so many different ways to look at things.
Yep.
And that's why I say, find someone that you like, that you trust, that that you can learn from. Because there are too many opinions out there and people to learn from.
I think the message too, like we were saying earlier, is just like, don't go it alone. Like you don't have to go on the investing journey alone. Whether it's courses from people that you trust, or it's a financial advisor, or it's a community like ours where you can get feedback on your ideas, or you have questions. Even YouTube, right? Like if you can connect with people there. If you're going it alone, I think you're going the wrong direction, because you will learn so much more, and you will get along your curve faster, your investing journey faster, if you have people to help you.
Exactly. Especially people like you that are really smart.
And you.
Thank you for joining me today.
Yeah, thank you.
This was a lot of fun, and we got to go hit the mountain now. Well,
Yeah, it's snowing out there.
tomorrow we'll get out there. But yeah, thank you guys, and I will see you in the next video. Please let me know, comment, let me know if this was helpful, what you want to learn more about. Maybe we can get Travis on again to talk about some more detailed topics. And I'll see you guys in the next video.